morning. Today is Tuesday, June 19th, 2012. Herein we give a commentary of the commodities complex as it closed last night and as of trades this morning. Two events that unfolded yesterday were, one is the RBI credit policy which was announced yesterday at 11 a.m. wherein the RBI left the interest rates unchanged for the banks. Markets were very optimistic and hopeful of a minor reduction of at least 0.25% basis point in the interest rates, which did not happen. The market spooked and dived downwards, and the INR weakened and closed at 55.9. That is a pivot rate at which the INR is trading at 55.9. A break above 56 could take it even up to 56.40 with support at 55.70. So watch out for the INR moves during the course of the early trades for tracking the next move in the commodities complex, especially for bullions. The second event that unfolded yesterday was the Greek elections, which were positive. The positive outcome of the Greek elections meant that the Eurozone package, which was supported by the New Democratic Party, was supported for, and the markets were optimistic and hence opened gap up yesterday morning. But this news of the optimism of the Greece elections faded out even as the Spanish bonds hit a 10-year high and took the sheet off the markets. Two events that unfold today and tomorrow are the G20 summit meet at Mexico today and tomorrow, which could give some commentary or throw more light into further support to support the Eurozone crisis and bail the Eurozone out of its crisis that is happening as of now. The US Fed FOMC meet begins today and concludes on Wednesday afternoon, which is after market hours on Wednesday, later in the evening tomorrow. The outcome of this will decide the shape of the commodities complex for the next course of the next month or two. Four outcomes are possible out of the FOMC meet. One is do nothing. Second is announce a QE3 package, which is what the markets are hoping for. Third is give a small commentary that the economy is on bad shape and they are ready to step in with further tools as and when further deterioration takes place. Pertinent to point at this point is that the last couple of weeks the data from the US coming out have been a little bleak, and hence optimism in the markets that some kind of a stimulus package will be announced. The fourth option is what they called last time as a Operation Twist. That could be extended further by a further 3 to 6 months, or further funding could be put into this Operation Twist of up to $150 billion. Either of these 3 or 4 options are likely, which will decide the course of the market over the next month or so. Any kind of stimulus package that could be announced, if and when announced, could weaken the US dollar. US dollar is now trading at around 81.8. Any weakening of the US dollar means that the commodities complex could go up marginally to that extent. So the markets are waiting with bated breath as to the outcome. Trade less during the course of the day. Once the FOMC meet begins on Tuesday evening Indian time, the markets will start on a roller coaster ride. It's expected to be choppy and violent up and down, as no trend or decision is likely to come out before Wednesday night Indian time. So trade less and be careful in trades and trade with strict stop losses, or better avoid trades for low risk traders till the outcome. And once the outcome comes out, of course you can jump into the fray either way as the case may be. Now we'll come into the individual commodities. Gold is now trading at highs of $1629. Support is now strong at $1620 to $1650 and resistance at $1635 to $1638. On the MCX exchange, it hit a high of 30,335. On a daily charts, the support is now seen at 30,170 and the resistance at 30,450. On the weekly charts or positional charts, the support is seen at 29,950 and resistance is at 30,500 and 700. In any case, it trades on positive territory as of now, at least till the Fed meet outcome is coming out tomorrow evening. And wait for fresh trades in our website. Please look into our website. Silver is trading at $28.80. Again, it's locked in the zone of 28.5 to 29.10. Further positive news, further positive on the charts on a break above $29.10 to $29.40. On the MCX, it closed at a high above 54,900. The resistance is at 55,100 and 55,300, and current support is at 54,200. Hence, the trading zone could be expected to be 54,200 to 55,200. Only a breakout on either side will not necessarily confirm the next move till the Fed outcome meet outcome is announced. Crude is trading at $83.3. On the MCX exchange, it traded range bound with sharp weakness yesterday. After opening at a high of 47.20, it hit a low of 46.04 and closed at around the 46.50 mark. The resistance is now seen at 46.70 to 46.90 and support at 46.00. Only a close below 46.00 would signal further weakness till the 45.50 mark. A break above 47.40 will confirm further positive till 47.90 to 48.00. Natural gas traded highly positive during the course of yesterday. It trades mild positive as of now at around MCX should trade at around the 144 mark. Resistance is at 148 and support is at 140. Base metals, especially copper, traded highly range bound yesterday in the zone of 416 to 421. Strong support is seen now at 416. It closed yesterday on the MCX at 418.80. Resistance is at 421 to 422. A breakout of the zone of 450 to 422 will confirm the next trend. Early this morning, it again trades flat and is expected to remain flat till for the next day or two till the meet outcomes are announced. Nickel is trading highly range bound. It closed at around the 936 mark. Support on a weekly basis is at 924 and resistance at 945 to 948 mark. Zinc and lead, traded with mild negative bias yesterday, was unable to push ahead in spite of copper trading at higher levels yesterday. The supports are now seen at 105.5 and 104.5 respectively for lead and zinc. All in all, wait for fresh trades in our website at www.akshayaship.com and listen to our commentaries on YouTube being posted on a timely basis during the course of the day. Have a good trading day. Thank you.